After a brief sell-off that we've seen, small cap stocks, they seem to be back in action. Today, the Nifty Small Cap Index has risen. It soared to a historic high. We're talking about life highs, 13,240 odd levels. The sharp rally that we are seeing primarily led by standout performances from certain stocks. Which are there? There's BSE, there's Suzlon, there's Apar, Kalyan, also Zensar. Now, AMFI, the data that we've got from the mutual fund side of the business, that data is underscoring this trend that we are seeing, this traction towards small cap stocks. This data reveals there has been a robust kind of inflow in small caps and mid cap segments for the 8th consecutive month now. In stark contrast, the large cap funds, they've seen outflows, and this is happening now for the 5th straight month. So the question now looms, what has propelled the small cap index to the kind of unprecedented heights we are seeing? And the question also, the bigger question is, will this momentum endure or not? Let's ask market veteran, director at IIFL Securities, Sanjiv Bhasin, joining us. Great to have you this evening, Sanjiv Bhasin. Why do you think we are seeing this kind of traction in the small cap universe of stocks? Typically, there's more risk associated with them. Price fluctuations are much higher. The information, of course, on most of these counters is generally much less compared to the large caps or even the mid caps. So explain to us this phenomenon that's currently playing out in the market.
Yeah, good evening, Vikram. Well, it's a tale of two cities. You're sitting in a bull market of never seen in the last 5 years. And who's complaining? And you have the big boys, Reliance and HDFC Bank, being overweight, being over-owned on the index, which is not letting the index do much. So it's a tale of two cities, like I told you. One, the impact cost of mid caps and small caps. Two, the ownership pattern. Mutual funds were underexposed. And three, the turnaround in sentiment and earnings. So Suzlon, Zomato, REC, PFC, ONGC, these are pedigree stocks, not just run by the mill stocks. And it tells you that mutual fund inflows and the retail investor is putting his money where his mouth is. He wants a taste of the broader market, which is truly outperforming. So just to tell you, the index fell 6-7% and the mid cap index fell 7%, but the recovery, the index is up 3%, mid cap is up 10%. So it tells you that the retail flavor is driving this market. The three reasons for the FI outflows are purely higher bond yields in the US, strength in the dollar, and thirdly, the global geopolitical. Now, all that meant ETF flows, which are predominantly in the likes of Reliance, HDFC, and the banks, those are seeing selling pressure, whereas the broader market is outperforming, and that may continue into the new year.
Kind of performance that we are seeing right now, are fund managers late to the party when it comes to the broader markets? Do you think this momentum we are seeing in that space, will it sustain or not at these levels? Because these are historic highs. Are we likely to see the mid-cap index move up even higher from this point? And if so, which are the pockets and the stocks you think that will lead the charge, both in the mid-caps and the small caps? Clearly, these stocks that you expect to grow into large caps, those is where we are going to see the maximum action, I imagine.
So, Vikram, it's a glass half full, half empty. I will not stick my neck out that they are, very cheap or they've not. There will always be inevitable corrections. But for the last 6 months, people have all been touting that the mid caps are over bloated and overpriced. And whether it's defense, whether it was railways or the PSU basket as whole, everyone felt it was overbought. So you've seen some sort of correction which comes in, but the pullbacks is amazing. In my 30 years, I've never seen such strong momentum. Yes, like you said, the smart fund managers any mutual fund is underperforming the Nifty or the mid-cap index. And that's telling you that they did not have the prowess to invest more wholeheartedly in the mid-cap universe. And that is what is catching steam on any decline. Providentially, there will be corrections which are part and parcel. But as long as earnings and the circumstances remain good, who thought that power will be in the best position ever? NTPC, ONGC, REC, PFC, all are hitting new highs. And that tells you that the power structure or the power bonds which they have, given that the sovereign bonds will be inaction from the next year, will mean that sovereign debt bonds, particularly REC, PFC, NTPC, Tata Power, they will be in a very sweet spot. I still think mid-cap IT, select stocks on the mid-caps will outperform, and the rest will be part momentum, part trading, which is going on in the market. However, like I said, I think it is the time of the large caps now to outperform, and they can also play a catch up because we are very, very bullish. Given that FI selling is now seeing exhaustion, and with stability in yields and the Fed no longer going to raise rates, I think there can be a steady flow of money into India, in particularly first in large caps and then the mid caps.
If that is the reality, that we are going to see more of those fund flows into the large caps now because they have a lot of catch up to do, Sanjiv Bhasin. If you're making a portfolio strategy with a keen view on all the moving pieces in the markets, especially with the risks emanating from the global setup, how would you place the small caps against the large caps and the mid caps right now?
So firstly, you have to hold the large mid caps because they add the delta on your portfolio. And let me tell you, the trading part of the market has made money. So select people are exposed to mid caps, which have done very, very well. If I can name a few stocks, I would like to put it on record. We have ownership in those, and we think they are turnaround stocks for whatever reason. First among them would be Idea. We think Idea has undergone a lot of catastrophe because of the interest payments and so on. 33% of Idea is now owned by Government of India. Idea has never defaulted on any bank loan. ARPUs are steady at 142. It has stopped losing its user subscriber base, and the parents are ready to put in capital into it. They've just received a capital from HDFC Bank. I think Idea can be a very strong turnaround given that data is doing extremely well and ARPUs are rising. As a disclosure, this is one stock which has been in our portfolio, and we think that this is a very, very big or can be an outperformer. Second is TTML, which we are again bullish. It's the consumer-facing arm for the Tata Group on the ICE, that is the Internet Communication Telecom space. And at 85 rupees, it has a very good risk-reward for outperformance. Third play would be a quality stock like Devyani International, which owns the brands of Pizza Hut, Kentucky Fried, and Costa Coffee, and which came out with reasonable results. But EBITDA has margins have fallen because of cost increases. We think these are 3-4 stocks which you can play. On large caps, we like the Bank Nifty itself. We think ICICI and Axis are going to lead from the front, and that would be part and parcel of the index because large caps would be definitely bought on this by foreigners.
So when you increase your exposure to the broader markets right now, and you're suggesting a few large cap names as well, tell us, when you are increasing your exposure to the broader markets, how should you go about hedging your risks right now? Because you did mention valuations at this point in time, and you did say you didn't want to stick your neck out. But if at all you're going to realign your portfolio to how the fund managers are thinking and they are trying to play catch up, when you're doing that at a personal level, how exactly do you go about hedging your risks, Sanjiv Bhasin?
So hedging is a part and parcel of how you can play on the option side. That is a strategy which keeps coming and going, and you have to try and hedge yourselves when the markets look like they've reached a crescendo and so on, which was the case when we hit 20,000. But I think we've weathered that storm well. Mid caps have really shown their mettle, and they are showing a lot of outperformance. So select mid cap banks, select IT stocks, select mid cap universe. These are the ones which you play. You can hedge yourselves on the index or on the Bank Nifty, because index and Bank Nifty have a prohibition of over ownership by FIs, and when they sell, they will sell what they have, and that is mainly in financials. Power is one sector which has been re-rated and can see further re-rating, but we also think some of the mid-cap banks, if I can specify, AU Bank looks very good. There is there was a merger which they did with a small financial bank, which has seen some sort of weakness. But I think given the grassroots level lending which they have and their expansion, AU Bank is one stock which you must own in this carnage on the banks.
So now looking ahead at all the possibilities in the markets, in the kind of bullish trends that we are seeing, what are the potential risks that one should really pencil in to be able to form a proper strategy?
Well, firstly, Vikram, the risk is of being underinvested. There is nothing called timing the market. It is time spent in the market. And for 1 year, people have been crying for corrections only to be left out and feel the feeling of left out. Why do you think the index or the mid cap or the small cap index is hitting all-time highs? It is because of under ownership. So please don't underestimate the power of the economy. The demographic premium is evident for you, whether it's airplanes, it's hotels, or it's consumer spending. And I think that has miles to go. Also, oil has been on a on a fall, which has created from 95. It has fell. Today, oil is at 78.5, which is a blessing in disguise for India. The dollar has started to weaken, which means emerging markets will be in a very sweet spot. So I am looking for a sparkling Diwali, and I would say build up your portfolio. Don't look at the next 3 weeks, look at the next 3 years. There can be little uncertainty when the elections come, but we still think that we will go to new highs by the end of the year.
So fresh highs as far as the broader markets are concerned, and the momentum is most likely to sustain, is what Sanjiv Bhasin is saying. And think long term. It's something which is very sage investment advice. Sanjiv Bhasin, it's always a pleasure getting in your perspective. Thank you very much for bringing in your very clear views. Thanks indeed.